Hello traders and welcome to another video review. Today is Tuesday, 27th of the April 2021. Let's take a look at the Forex calendar to see what is going on. Today, the most important data had been already published. Those data are interest rates from Japan, from the Bank of Japan, and of course the Bank of Japan press conference. As you can see, at 4 o'clock a.m. The Bank of Japan interest rate decision was to hold the rate at the level of minus 0.1%, which was in line with the market expectations. During the London session, there is apparently no important data to be released, but during the New York session we have a house price index, Case-Shiller 20 City Index, and the most important, the consumer confidence data, scheduled for release at 3 p.m. As you can see, we have a forecast of 113.1, which is bigger than the recent reading of 109.7. So the consumer confidence might beat the expectations, and that means we have plenty of confident Americans present in the economy. So we will see how this will play out. Let me just switch to the charts. The first chart we are going to talk about is US dollar to Japanese yen chart. Due to the interest rate decision, we have a 5-wave impulsive cycle completed. We have ABC corrective cycle completed as well, and it looks like we have almost hit the extremely oversold market conditions on the RSI. So let's take a look what is going on here. Let me just scale the chart. Let me just zoom in a little bit to see what is going on. As you can see, we got one-on-one market geometry at 107.93, and the low of the wave C is a little bit lower. The low is actually at the level of 107.49, which is like a 50 pips below, but the market hits as well 38% of the Fibonacci retracement, 107.77. It almost hit 127% of the extension of the wave C, 107.37. So we have stopped somewhere in the middle of in the middle between these two clusters, Fibonacci clusters, and then we have a bounce, and this is an example of a kind of a skewed hammer or a skewed pin bar, because this is a little bit harder to say that it's like a textbook example of some sort of the candlestick, but we can surely say this is some sort of the pin bar with the lower shadow longer than the upper one, which means that the market participants in form of a bulls have been buying the dips somewhere around the Fibonacci retracement levels or extension levels. Next day we have an update. And today we have update as well with the test of 108.41, which is kind of an interesting technical resistance. It was the low of the previous wave 4, so it might be quite interesting to see whether this kind of hit is just a temporary one, or maybe we will close above it. So if we will close above it, then please notice that we have another low to be tested, which is the low of the wave A, which is somewhere around here, 109.01. So this is that level, and that might be the next target for the market. So let's just adjust the chart again. We have still this short-term trend line, but the market is far away from this trend line. 38% we have retraced. Now it looks very nice for a bounce. The question is whether that would be a one-off bounce, or maybe we will continue some sort of the movement higher towards 109.37, towards this trend line, or maybe even a little bit more. We don't know that yet, so we will just concentrate more on the current market reactions on 108.41. So this would be, let me just copy one more level. Yes, this is the low for the wave C, and now that will be the technical support 107.50 or 49 pips. So the bounce is about, well, about 90 pips, not that much, because this kind of a bounce we've seen in the inside of the wave ABC wave, inside of the correction, the wave B is 98 pips, right? So this is a 90, so it's in line with the previous bounce, which means that we can't still say anything interesting about the market plans, about the market scenarios in the near future, because the market can do too many things right now. So one thing we can do is to keep an eye on this market. If we are talking about the euro to the Japanese yen, we have this market. Euro to the Japanese yen, as you can see, is very interesting as well. And let's just take a look if it's following our scenario. As you can see, it is. The scenario is to the upside. The scenario is to test, to break above. The first thing is to break above 130.64 and then follow, well, almost 200 pips, 133.13. So far, very nice reversal and test of 129.63, which is this technical support, tested once on the 8th of the April. Now we got very nice bullish. It looks kind of like a bullish engulfing, but it's in the wrong place. So it's not a textbook example of the bullish engulfing. Anyway, it's still a good bounce. Next day, another green candle, and today we will see whether this market reaction is just a one-off reaction, or maybe we are following our scenario to the upside. First, we need to break above 130.94. which is the high of 20th of the April 2021. Then the road towards 133.13 is open, and we should expect higher prices. Of course, on the other hand, if we break below 129.55, then of course we might test the blue trend line, which is the technical support. We are out. We are out of the channel, which is not good as well. And bearish, of course, pressure will intensify. So please keep an eye on these levels. We are still trading inside of this rather narrow zone between 126.55, 130.95. So that's basically what the market is doing. But the market doesn't want to fall. Right? The lower levels are being denied. The lower levels are being bought back up. So please consider the fact that euro to the Japanese yen might do another wave to the upside before any bigger than 1.81% correction will be made. So that's the euro to the Japanese yen. And let's just take a look at gold, as we didn't look at this for quite some time. And what do we have here? We have a breakout. We have a breakout above 1,766, right? So that was this key level, key technical resistance. We've made a local high at 1,797. And right now the market is testing from above 1,766 as a technical support. So let's just switch the colors. So that will be now our technical support level, of course. So that will be the green line for the market participants, and we have the recent high around here. So that will definitely be our point of a reference. Please notice that the bounce is in three waves: wave A, B, and C. Let's take a look whether there are some kind of a Fibonacci measurements available here. Maybe some kind of a one-to-one measurement. Unfortunately, there isn't yet. So even if we adjust it like this, the one-to-one Fibonacci geometry level is 1806. Okay, so there is another target for the bulls, but it doesn't look that that's strong enough. This move doesn't look that strong enough to hit this level. We might have actually the high at 1797, so we can move a little bit lower now. So if that's ABC correction, we should see a move to the downside. Let's just make a parallel channel to see whether this market is trending in the channel. Of course it is, and this is our scenario for gold. If market will fall out of the channel and then it will fall out of it will break below 1766, this is the signal that this ABC up move has been completed, and now the market is back to the main trend, which is still down. So please keep an eye especially on this level, as it might be very important level in the short term for all of the gold traders. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. Take care and bye bye.